Welcome to Consultants and Money, the podcast for solo consultants who want financial clarity without the overwhelm. I'm your host, Erica Goody, CPA, bookkeeping, and CFO partner, and a fellow corporate ship jumper who built a business with balance in mind. Each week, we talk about the real money stuff, from keeping your books clean to calming cash flow chaos, saving on taxes, and planning for what's next, so you can focus on your clients and enjoy your life. A quick note, this podcast is for educational and informational purposes only, not financial, accounting, or legal advice. Be sure to talk to a professional who understands your specific situation before making any decisions. Hey there, welcome back to the show. Today we're talking about something that sounds super basic, but in real life gets messy real fast. What clean books in your business actually look like. And maybe more importantly, why yours might not be quite as clean as you think. So let's get into it. First, what do I even mean by clean books? Clean doesn't mean someone's logging into QuickBooks and categorizing things. It means your books are consistent, accurate, and actually useful to you as the business owner. You can pull a report, understand what it says, and trust the numbers. When your books are clean, tax season is way less stressful. You can plan better, make better decisions faster, and stop second guessing where your money went. You can finally stop wondering things like, wait, how did I make that much and still not have anything left in my bank account? So let's talk about how to spot when something's off, because honestly, this happens to almost everyone at some point. Here's a few signs that your books aren't as clean as they seem. Number one, you're seeing the same kind of expense show up in multiple categories. For example, Zoom might be categorized as software or subscriptions or communication tools, depending on the month. That might sound harmless, but it makes your reports hard to read, and it makes finding cost savings opportunities hard to identify. Number two, your balance sheet accounts aren't reconciled. That means your QuickBooks balances haven't been matched against your actual bank and credit card statements. Reconciliation is how you make sure you didn't miss a charge or duplicate one. It's like old school comparing your checkbook to your bank account, except most people don't even know it's supposed to happen inside QuickBooks. But when it's not done, the rest of your books really can't be trusted. Number three, you've got a bunch of transactions sitting in Ask My Accountant or uncategorized expense. If you see those on your profit and loss report, that's your bookkeeping waving a red flag saying, hey, something's not done here. Those need to be addressed. Number four, this one's big. Owner draws or distributions are showing up in your profit and loss statement. I'm going to say that one more time. Owner draws or distributions are showing up in your profit and loss statement. That is a no-no. That causes huge, massive tax headaches. Here's how. If you're taking money out of your business to pay yourself and you're not running payroll because you're not an S Corp, that's called an owner distribution. It's not a business expense. It shouldn't show up on your P&L at all. If it does, you're underreporting your profit and setting yourself up for an audit with surprise tax bills later on. Okay, and finally, here's the last one. Your business and personal expenses are mixed together. This one's unfortunately super common, especially if you're using one card for both. Trust me, if you're doing this, you are not alone. But it makes your books messier, your taxes harder, and your reporting a lot less useful. Not to mention it exposes you to a legal liability from your LLC standpoint. Let me tell you what I see in real life as a bookkeeping fractional CFO. A lot of times when a client first comes to work with me, they say something like, yeah, I think my books are pretty clean. I think they're ready for you. And listen, I believe them. I'm not a negative Nancy. They're doing their best. But when I get in there and, there's like room for improvement. I see that their bank accounts have never been reconciled, their Gusto payroll journal entries are incorrect or missing pieces, and the same vendor charges are spread across 3 or 4 different categories depending what month you look at. It's totally fine. I help them clean it up. That's part of the job. And I know people don't know what they don't know. It's totally fine. There's no shaming here. But what's important is they thought everything was ready to go, and it wasn't. And that could have led to a tax filing full of errors, or worse, a surprise tax bill when they weren't planning for it. If tax season always sneaks up on you, let's change that. I help solo consultants clean up their books, get clear on cash flow, and plan for taxes, so you can head into year end without a single surprise. Here's how it works. Go to ericagoody.com, fill out the connection form, and we'll book a no-pressure free meeting to see if we're a good fit for each other. I'll leave a link in the show notes. So what do clean books actually look like? Clean books have simple, consistent categories. Software is always in one place. Meals are always meals, but they're not personal meals. No guesswork. Monthly reconciliations. You've matched what's in QuickBooks with what's in your bank and credit card accounts. This catches duplicates, missing charges, and weird one-off transactions that can sneak through. You have a clear line between personal and business expenses. You're not accidentally deducting a Target run that included groceries, socks, and your kid's birthday gift. And lastly, and maybe most importantly, your reports make sense. You can pull a profit and loss or a balance sheet, and it actually lines up with what's in your bank account and how you feel your business is doing. Because here's the thing, if your bookkeeping is wrong, your reports are wrong. And if your reports are wrong, your taxes are wrong. It's like a fun financial information waterfall. We don't want your taxes to be wrong. That's when people really start caring. Since we're talking about reports, here are the 2 most important reports you need to worry about from a tax reporting standpoint. Number 1, your profit and loss statement. This tells you if you made money and how much you made. Number 2, your balance sheet. This tells you what you have and what you owe. If your P&L shows a healthy profit, but your bank account is empty, that's usually a clue that something's off. Maybe you're taking too much money from an owner's distribution on a monthly basis. And if your balance sheet shows weird negative numbers in places there shouldn't be negative numbers, or stuff that you don't understand, it might be that your accounts haven't been fully reconciled. So what do you do if your books aren't quite there yet? First, know this. It's so common. You're not alone, and you're not dumb either. Most people don't realize something's off until a tax surprise hits, or they're trying to decide if they can afford a new hire, and the numbers just don't feel right. But here's the good news. You don't have to fix everything overnight. Start by checking your categories. Are similar expenses grouped together? Look at your bank reconciliations. When was the last time someone did those? If you see anything marked uncategorized, go ahead and figure out where those transactions belong. And if you don't know how your Gusto is supposed to connect to your QuickBooks, because it should, just ask for help. And getting good accounting help might mean going to someone other than your spouse or your friend's brother's cousin. Good help is out there if you just go looking for it. You can do this. I believe in you. Thanks for joining me today. If you found this episode helpful, share it with a fellow consultant who might need it too. And until next time, here's to cleaner books, calmer cash flow, and more time for what matters most to you.